Hi everyone, hope you're all doing well. Ready for another week in the stock market. It's a busy one. It's already started off really busy this week, and we'll get on to some things that are going on this week, and also S4 Capital, because that's made a big move today, and we'll talk about my thoughts on that at the moment and why that's making such a big move. So starting off with the UK, there's a lot of UK earnings, especially this week, next week, really busy on the UK side. I'll go down the list here. Sometimes these aren't always correct, and sometimes there's some missing, because I believe there's a few sites that are reporting that Card Factory are going to be doing a trading update, and I don't believe this is on this list, for example. So it's always give or take with a few things, but we'll go through them. So AstraZeneca, Shell, Unilever, Rio Tinto, that's been the one that's been really attractive to a few dividend holders or buyers at the moment. Bats, covered this one quite a bit, quite an interesting one. I'll be checking them guys out. GSK, we've got Lloyds, Barclays that are going to be reporting earnings as well. We've got Airtel Africa that are being reporting. That's going to be really interesting because historically, Airtel Africa always drops when it brings out a trading update. So see if it follows the historic pattern. I actually, a long time ago, I was talking to someone that was doing a bit of day trading, and they said actually the best thing that they do is actually not follow any charts. They just historically follow what stocks do, and eventually if you follow a stock close enough, you can kind of guess where it's going to go. And there's certain companies, another example would be InMode. InMode always brings out preliminary earnings. You can look historically when they bring out preliminary earnings, and it normally goes up. So you buy when that happens, and then when they bring out their actual earnings, they normally drop. So when that happens, you normally put a short order in, and it's same like something like an Airtel Africa. You learn that normally when they bring out their earnings, it tends to drop. And eventually, when you follow these stocks a lot, you can get the patterns, and you'd be a bit playing in percentages because it might not always turn out that rate. But let's say you got the last 4 out of 4 the right way, the chance of it being 5 out of 5 is maybe quite high. But interestingly enough, it would be looking at like the currency, the Nigerian currency, because that has been really devalued against the dollar recently, so that could really affect their earnings. So that's one I'm interested to see. Games Workshop, this was really popular. Don't say it's mentioned as much, but really popular. Greencoat, UK Wind, I know some of you guys like that one. Frasers, ITV, Aston Martin, Money Supermarket, would love that one to drop a little bit. Obviously, a stock that I started buying, but it just went a little bit too high. I've stopped buying now. If it can go like 10-20% lower, that would be absolutely amazing if we can get that a little bit cheaper than where it is right now. It's got Forterra down here, but I don't think they are reporting unless it's the full year accounts. I'll have to double check that one actually after the video here. Superdry, that's about the UK stocks that are going to be reporting here this week. On to the US, there's a few mega earnings starting to kick off. Obviously, we've already had Domino's today. I think they're having a bit of a drop at the moment, if I remember correctly. Whirlpool, Logitech. Tuesday really starts to kick in there. Verizon, GM, 3M, Spotify. After the close, we've got Microsoft. We start getting to the really big ones here. Microsoft, Alphabet, Snapchat. That's a really volatile one. And I always hate when Snapchat goes first because they normally end up, not always, but normally, this is what I talk about patterns, you see. I believe Snapchat is the biggest, the most volatile stock when it comes to earnings. And also because it's volatile, and normally it's been quite negative, and it has been quite negative at the moment, it tends to move Meta and Pinterest, so they will probably move off Snapchat's earnings alone. Visa will be reporting, TDoc will be reporting, hopefully they're starting to move into a bit of a better direction. AT&T, Boeing, Coca-Cola, Tilray, and we've got after close Meta. That's going to be really interesting because I was just looking at their figures that they're forecast to do, and I was like, wow, that's actually like from where they were only like a year ago, where it was only negative growth or even just slightly positive. Their figures for this quarter are starting to move rapidly back into the right direction, so we'll see if that happens. I'm looking at Meta, I'm looking at the valuation, and I'm looking at the figures they've got to beat, and I was a little bit like, okay, we'll see what happens. We'll talk about that more when it comes around to it. AAA, ServiceNow. ServiceNow is an interesting company. Lam Research, eBay, Mattel. I'm sure they still make Barbie. I'm 100% sure they make Barbie. So I wonder if they're seeing some pop up because of that. We'll see. Anyway, Royal Caribbean will be reporting. That'll probably move the whole cruise lines and how that's doing. McDonald's, MasterCard, Crocs. Crocs is one I've been looked into so many times, and I just never got round the balance sheet on that one. AbbVie. AbbVie is quite a weird one. Then I'm sure AbbVie normally reports on Friday. Bristol Myers Squibb. A few people have been interested in that one for a bit of a dividend play. Honeywell, Enphase is interesting. I will be checking out their interest in for sure. Ford, Intel. I wonder if Intel's turnaround plan has started to kick in after 4 years now. Roku for solar, T-Mobile. Skechers down there. We've got ExxonMobil, P&G, and Chevron on the close. AstraZeneca as well. So yeah, I mean, obviously, I think the prime days there are obviously Tuesday and Wednesday. You know, really interesting to see what if for me, I'd really interested to see what Google do and how things are going on there at the moment, and Meta as well, because obviously they've had such a run up in the company, and the numbers are supposed to hit now look a little bit tricky anyway. But getting on to the next bit is we have the Fed. The Fed are going to be meeting. And the Fed are going to meet on the 25th to the 26th. Obviously, the 26th will mean they bring out on the Wednesday, and they'll be setting out their interest rates. Now, I couldn't believe this. I always look at what the analysts are forecasting them to do. I could not believe that I was reading this today, that future traders are now highly confident with a probability of over 99% that the Fed will raise its basis points by 25 basis points at the next meeting. While a rate hike in July is widely expected, uncertainty remains regarding how much further the Fed will need to act this year to bring inflation back down to its long-term target of 2%. I nearly fell off my chair when I read this. I cannot believe that traders at the moment are expecting a 99% hike, or the probability of 99% of a 25 basis points hike in the interest rates. I nearly fell off my chair when I saw this. I was like, why are they still hiking up at 25 basis points? Like, not even like 10 basis points. Like, surely that, if anything, a 10 basis points hike makes sense. 25 basis points. That's like something that we're doing when inflation was at 6, 7, 8%. We're at 25 basis points then. I mean, we're going to be talking about now where the interest rates are going to be nearly double what inflation is. Like, the target is 2%. We are currently sitting at 3%. And this is from June's data, by the way. This is June's data, not July's data. You look at true inflation. True inflation is at 2%. We are at the 2% target. You look at the forecast here. We're at 3%. This is June. We're now in July. It's going to drop. It's going to drop into the 2% this month. Right now, inflation is at 2%. But yet the Fed is still going to be putting up the interest rates up 25, not 10 basis, 25 basis points. Double what the inflation is. I cannot believe this. I don't understand how people are in that job making them decisions. It's unbelievable. Like, there's no need. Like, for the interest rate hike to come into the system, it takes a couple of months. But there's no need to be going a couple of months ahead, because right now we are in the 2% range. You need to start breaking already. You don't break when you get to 2% and go, okay, well, now we're going to break, because everything that you've been putting in will still have to take effect. And then we're going to start hitting deflation. You know, if you take out the core CPI, which seems to get pushed around a little bit at the moment, which is not a good indicator, because energy prices are the whole root of inflation. You take out energy prices, you know, everything follows energy prices. So you can't take that out and then go, oh, well, it's still a little bit high. Of course it's high, because energy prices drop and everything starts catching up to it. It's a leading indicator. You take that out, you start using lagging indicators. You start taking lagging indicators out, like shelter. Shelter is the slowest thing to react to inflation, because it takes so long for that to get into the system. That is the slowest. And then you start taking that out, like a CPI or the inflation rate. We're starting to hit like 0%. You start taking the lagging indicators out. We're at 0%. So if you're going off lagging indicators, that's the worst thing, because everything else is going to be already at the target rate. And if you start pushing that lower and lower, where we're going to end up is we're going to end up in deflation. We're going to start pushing towards these sort of interest rates will start causing recession problems, because all this is doing now is affecting the consumer. The everyday consumer is getting affected not by a 3% interest rate hike. 3% inflation, or, well, let's be honest, we're at 2% inflation right now, right? 2% inflation isn't affecting the consumer. What will affect the consumer more and make their spending tighter is if you keep putting up them interest rates 25 basis points, because that's going to have the effect onto finance, loans, mortgages, the point where people cannot go out and spend what they want to spend, because that is going to, a 25 basis points on their mortgage is going to be so much more pressure than if inflation is currently at, it's probably going to be 2.8% or the month after is 0.1% on inflation isn't going to affect the consumer that much. They aren't going to notice that much. They're going to massively notice a 25 basis points hike up. That's all that's going to do is affect the consumer and make spending tightening worse. And people aren't going to go spend because the mortgages are going up, finances are going up. And then you start causing a recession. Well, if you have a recession that starts kicking in now, that's going to hit inflation massively, where you start hitting deflation, and then we have another major problem here. It's absolutely crazy. It's crazy that before we hit the brick wall, you start breaking. You don't hit the brick wall and then break. But that's what Jerome Powell's doing, and it's crazy. It's absolutely crazy. It's suicide. It's suicide. I've always said this is the biggest threat to the US economy. The biggest threat to the US economy is Jerome Powell, and he's living up to that. If we have a recession now, the recession will solely be down to one man, Jerome Powell, and he will cause that. He would have caused recession, growth, share prices going down, people losing their jobs, all down to one man. And it's absolutely crazy that these people are in here making these sort of decisions anyway. Last one, S4 Capital. So S4 Capital has had a ugly day today, down 21%. And basically it has popped it back down to where it was around June time. So it's basically just sat back down near its, well, not near its 52-week close, but really close to it. So obviously it's had a tough time recently. And obviously it started to have a bit of a rebound, and then obviously it's gone down this much, and I've seen the panic, I've seen the fear, the share price is down, I've seen the fear everywhere around S4 Capital at the moment. And, we look at the situation here and, should we expect S4 Capital to be having a tough time at the moment? Probably. When you look at the likes of Meta, you look at the likes of Google, look at all marketing companies, they're all struggling pretty much out there. So we can see that S4 Capital should be having a time where it's not great for the moment. So it makes sense from that point of view. A lot of companies are pulling back the marketing. It makes sense for S4 Capital to be not having a great time at the moment. So there's some understanding around there. But the reason why it had a drop-off day today down to these sort of lows was it came out with a profit warning. Basically came out with trading today, but it's a profit warning. So I'll just jump to this paragraph because this summed it up basically better than what kind of companies. So the May and June in particular came below what was expected. The like-for-like revenue growth is now expected to be in 5% in the first half. The slower top-line growth has resulted in the company's operational EBITDA and operational EBITDA margins being below budget, but showing reported progress on the year prior. Based on the slower market growth in the first half, we now target year like-for-like net revenue to be in the range of 2 to 4%, as opposed to 6 to 10%. So obviously that's a bit of a downgrade to where we were previously. On the top side, you're expecting around 6% downgrade. From the middle point, you're about down 5% on revenue basis. So obviously that's a fair bit of a cut down on the revenue. We now target operational EBITDA margin of 14.5% to 15.5%, as opposed to the 15 to 16%. Now, obviously that gives a mid-range of around about 1.5% cut on the EBITDA margin. As in prior years, 2023 will be again a significantly second half weighted, reflecting seasonality. I was quite surprised because I looked at this and thinking, are we at a point now where we start valuing S4 Capital a bit more towards, EBITDA and profitability? And I thought if that's the case, then it's quite good that with this impact on revenue, they're only downgrading their EBITDA margin by 1.5%. Like, that's not really that much. Revenue growth was quite a bit of a cut, and I thought that was obviously not great, but I can kind of understand it. If you're coming around 2 to 4%, I think that's somewhere what the likes of Google and Meta have had to pull out in the last, kind of year. Even the margins, I thought, yeah, it's not too bad. And then I thought, they're going to get hit today. But I thought, obviously, there's a lot baked into the share price. When you look at the share price here, it's already been, factoring in a lot of negativity. I wasn't expecting today a 21% drop in the share price. I looked at that and I was like, whoa, you're pushing us back to 52-week close on this update. Like, we've only had a little bit of a downgrade here on that EBITDA margins. Granted, that was a bigger chunk on the revenue, but I was like, I don't know if we should be down at 52-week close, back down at 626 million market cap. I was looking here, if you look at the point of view of the EBITDA margin of, let's say they hit 15%, for example, and let's say they do around about 1 billion in revenue still. If they do around 1 billion in revenue, you're talking around about 150 million in EBITDA. So then you look at the market cap and you say, well, you've pushed it back down. The market's pushed it back down to a 600 million market cap. Well, you're around about 4 times EBITDA, if my maths is adding up. I was like, does that really make sense for this company? I mean, I hold my hands up, like, it's been a bad year for the company, but I can understand why. You know, you look at all the marketing companies out here, they've all had a bad year. So I just look at SL Capital and I go, but it's had a bad year, but does it deserve to be down this low? Like, I think digital marketing will come back in the next few years, and that's what I invest. I don't invest for where it's at in 12 months. I invest where it's going to be in longer term, and I think digital marketing will carry on doing, fantastic in the next few years. But even though, granted, when you take that out of context, you look at where we're at right now, and I'm looking at this here and thinking, unless I've been stupid, operation EBITDA margin of 15%. Surely we should not be that low on the share price. Like, I know they've had issues, I know there's been issues around Martin Shkreli's health, but should we be this low? Like, I just think that was crazy. Absolutely crazy. I mean, so yeah, I think that I can understand why there was punishment on the share price today, and I can understand why there's that in the environment that we're in at the moment, but I was like, isn't it a bit too much? So yeah, I mean, I think the update today means there's probably going to be pain in SL Capital's shares price, unfortunately, for another 6 months now. I don't think we'll start to see a recovery in SL Capital for the back end of the year. When SL Capital say, seasonality, we do start to recover in the back end of the year. Unfortunately, I think that means that until we see this into the earnings towards the back end of the year and we start to see the improvement, unfortunately, I think that SL Capital will be a stock that does stay down here for, probably the next kind of 6 months. But I look at the long-term view, and if they go back to what they were doing previously when digital marketing comes back, and you start growing at, a lot better rates, and you look at the valuation here, I still think it looks pretty attractive at the moment. So yeah, I was a little bit disappointed, but I understand why it's struggling a little bit at the moment. And I look at the valuation and I go, has the market sold it off too much? And I think so at the moment. Anyway, that's what to look out for this week, and also some thoughts on SL Capital. Hope you enjoyed the video as always, guys. Catch you in a bit.